Yeah, new all-time highs for the stock market. That's what many people are expecting currently, and indeed the chances are quite good. However, will the market continue? Will we see some rising markets, or will the market turn down soon? That's something we want to check on the charts, and let's have a look at the probabilities too. Before we start, a friendly reminder, we had a change in the summer and winter time in Europe, at least, depending on your time zone where you are. Please be aware that the US market is changing their opening hours. It might be a little bit different. It might be 1 hour earlier than you're used to, especially when you're living in the European time zones and you realize that you changed your summertime already to the winter time. Okay, let's have a look at the Dow Jones. And what I'm showing here is the Dow Jones future, the CME future. All the contracts I'm showing now are the future contracts. Whenever you are trading something different, let's say a CFD or any other contract, you should be aware that the prices may vary a little bit. So please find out yourself in your chart. So that's the reason why I normally not talking so much about exact price levels, but about time. So that I said the high from 23rd of October, for example. So you can find in your own chart and you can verify this is the same level you want to enter a market or not. So please keep this in mind because this is the December contract. You can always see this here on the upper left chart. What I'm dealing with, the YM contract is the E-mini Dow tradable from the CME if you like to trade this. Okay, we had this before already, so not so many news in the big picture. We know we have the September high here and we have the February high here, which is the all-time high in the Dow Jones. So we are, some people are eager to see the market overshooting that and seeing some new high levels. But I strictly warn you, don't overdo it. Don't think that crossing this level will give you the opportunity or a good opportunity to buy the market because we still have the chance that the market comes down. Just a short reminder of this situation to get you aware. This setback is not far enough normally to give a high probability that this is the complete corrective wave of what we had here. Of course, it can end, it can continue, but chances are not really high. We can just have a short look at this. When we want to check an impulsive move, for example, an impulse, we had this. This is the Corona crash low. This is the high, an ABC to the downside. How far did it go down? And you can see it should be roughly around here to be in this high probability area. If you're more interested in these red areas and what these numbers and curves are doing, I will link a video to this video. So please check out the other video. You can find it here in the upper right corner and you can just go there and have a look how I deal with these probabilities and what these numbers are and why. But you can see we only have a really small setback, 20%, 25%, 30%, which is only at the beginning of a possible setback zone. It can be, yes, but the chances are high that it's not done already. So I strongly recommend not to overestimate this as the complete corrective pattern from the up move. It is possible, but it's not really high probable that this will occur. So this means the chances are high that when continuing to the upside, we later will come down because this trading pattern is quite typical. I just want to give you an idea, a brief idea how probable it is. In 33% of all cases in this case, we have this pattern. And if you add the double sideways, this funny guy here, D3 and flat, if you combine them, you have over or roughly a little bit less than 50% chance for this type of corrective pattern. And if I bring it up for you, you can see we have an ABC to the downside, ABC to the upside, and a strong move to the downside. And this one can easily be higher than this one. So if you want to compare this one, an ABC to the downside, ABC to the upside, and a strong to the downside, this has a 50% chance. And as this is most probably not a valid low of the whole corrective pattern here, then this is highly probable. So please keep this in mind. I'm not trying to convince you to sell short at that point here. I think it's the best option is to see what is happening here on a lower time frame. If we see that the market is building up some turning power or momentum, then we can sell short the market at that point. But at least I don't recommend buying at that market and saying, yeah, this is a perfect opportunity to sell. No, to buy long the market, because I think it might be a wrong one. So if you are long already, maybe buying from somewhere here, or what I will suggest to you maybe in a few minutes, if you want to go long roughly around this levels here, all good, but trail your stop tighter when you reach this level, because it's highly possible that the market will turn. Okay, I mentioned it already. There are the chances that we are still continuing to the upside, and maybe it's even tradable. So let's have a look, not on this time frame here in this picture. Let's have a look on a closer look in a 4-hourly chart. So we can see exactly what I've drawn here. This was the early September high, which is exactly this one here. And we had a typical A, B, C to the downside. And here we had some up move, and it's a little bit confusing, this area here. This might be a corrective pattern. This might be the first start. This might be an end. So we have a 3-wave pattern with a corrective pattern inside. You can roughly understand if you see this one. Only or without exact countings of what we have here. So I don't want to overdo this here. We have some exact possible countings here, but it's not really important to see that. We had a strong move here, and compared to that, this seems to be quite corrective. You can easily see this if you see the slope of this movement, which is not so steep like this one. It is more shaking between some lines here, and so this seems to be really corrective. And the easiest, or one easy way to trade this is seeing the last low, the previous low, which might be one of this one. I think they are roughly at the same level. You can see this or check this out. Yes, it's a little bit lower here. So this is the lowest low. This is the previous low, and some opportunity to enter the market long is the high in between. This is some typical way of trigger. So I think this is a good idea, generally spoken. Please wait a little bit before placing some orders, because I have something better, I think, at least. But this is a possible entry for a long trade in this case, with an idea that something around this one here, what we had here, will continue, and this would lead us roughly above our highs here. So something roughly similar to what we have here. Not necessarily need to be exactly the same length, can be a little bit lower, it can be a little bit longer, but roughly like this. And this is the typical wave pattern we were talking before. So this is indicating we have a good chance for a bull market now. That's awesome. Hey, let's celebrate the next bull market. But keep in mind, it might be ending soon. It might not be something lasting forever, because this needs, this has a good chance to come. Okay, so shall we buy this one? Yeah, principally, yes, you can do something like this, but in this case, I recommend something different. However, we can see here from the right-hand side, if you go to a lower time frame, the 50-minute chart, this is the right-hand side from the low. From that very point here, you see this is what we got so far. And is there a chance that the market is going to the downside? This is something I learned many years before, at the beginning of my trading career. Always ask the question, if I want to buy, okay, are there some good reasons to sell short the market? So I always try to find good arguments for the other side, because this is keeping my mind open. I don't want to be infected by my own thinking and wishful thinking and saying, yeah, I need a long and I need a bull market now because this is feeding my trading idea. No, that's not the case. I need to be neutral. I'm just the trader. I trade the market and not my own idea. That's important. So is there the probability that the market is going down? Of course, the potential is still there. Of course, tomorrow the world may crash, the stock exchange may crash. It's still possible, but it's not highly probable from this picture here currently. But what would give me an indication that the market will change that? And currently we have something like this here. We had a strong move to the downside, and what I like to see after a strong move is something like an ABC pattern. So if something like this is occurring, and really important, really important, the corrective pattern, the ABC, is coming to an end, typically marked by breaking through this level. If you see something like this, then it's highly probable that the market will continue at least for a while to the downside. So of course you can still trade the short side. This is indeed not affecting this picture. Why? Because if the market is in this pattern, moving like this, is doing something like this, everyone would say, yeah, it's still the same picture. And we have another chance to enter long the market when we are not breaking this high, but the latest high we had here. So something like this still can happen and is not affecting that. And of course we can sell short the market, but this is something not useful and not really a good idea in my eyes in the 4-hourly chart in this picture here, because the potential to the downside is quite limited. I can mark it a little bit closer for you so that it's easier for you to understand what I think of. Of course, it can be roughly in the range of these trend channel. I'm not a big fan of trend channeling because very often it's not very exact, but in this case, if I draw it exact, it seems to be quite good. The top here and the low here, they are fitting very good together, so they're giving me an indication where the market may find a low here on this side. But this alone is not satisfying me, to be honest. I prefer something like a Fibonacci cluster. For example, I can draw the Fibonacci's on the whole movement from 24th of September at midday. And you can see, okay, we had here the 38.2% already. The market came back from that point. That's good, no problem at all. Maybe we don't need this anymore. And we have another one at 50%. And we can try to find some probable areas from Fibonacci extensions, just measuring counter moves like this, and we can also try like this, whatever it is. And you see, okay, here are some levels clustering quite tight, maybe a little bit here around this area also. So these are possible support levels from a Fibonacci cluster. So we can keep in mind 27,600, I'm sorry, or you can say 27.6K. In this case, this might be some area of support. Okay, so shall we sell short this picture? No, I don't think so, because this is not giving us a good risk-reward ratio. If you have something like this, yes, it's possible. We can do this, at least for an interim short trade. I think that's not a bad idea if this occurs. It's not given that this will occur, of course, but if we see something like this, it's possible. Otherwise, I would strictly recommend to think about, not to trade necessarily. I don't want to give a trading recommendation. If you're not knowing what you're doing, then it's tough to say something like this. But we, for ourselves, we decided our current direction for trading is the long side when the market is going through this level here. But in this case, we did not trade, or we are not prepared to trade this one, because we find that something else is even more attractive. And let's switch to the S&P 500 future. In this case, also the CME traded E-mini S&P 500. That's the reason for the ES shorting, or you can also trade the micros, MES normally, and always the December contract in this case. And you can see some drawing here. I don't want to redraw this in this case, but you can see the idea is roughly the same. So if I go turn out a little bit here or zoom out a little bit, you can see, okay, these are the levels, the same levels. This is the high from early in September. And let me do this, because I think this is not 100% correct. So now it should be. So, and this is giving us the expectation that we can overshoot here and maybe later going down. The same argumentation with the Dow Jones. The only difference is, also this seems to be roughly the same. The only difference is because of the internal pattern and the movement here, it seems that this one is a little bit easier to trade because the stop is a little bit tighter. We also have the last low, which is the low from 21st or 22nd. And we have this one, this is the previous from 19th of October. And the high from in between. There's only one high level, but you should find it on your own charts around the 20th of October. And this is giving us a possible long entry, and we want to trade this for trading long the market, that the market will continue. We have different target ideas on this. You can see we have different projection lines. We are not sure which one is the correct one. So to be honest, I don't have any clue how far this market will go, but all these targets are leading above this level here. And to be honest, when we are overshooting this one, I'm quite sure that we will overshoot this one as well. So 3,600 is something we definitely have on our list. We see that this is highly probable that the market is overshooting. And so that's our trading idea. And because of the internal structure of this wave, we can have a lower entry. We can have the same idea of the stop. I can just show it again for those not aware of. We just check what is the lowest point. The lowest point is this level here, the low from 22nd. And our possible entry is above this level here. So we can just draw it a little bit above our entry. And then we can reduce the Fibonacci's to the only one and only last line of defense, which is the 78.6% level in this case. So this is marking our stop level for our long idea. So our entry will be here at that point, our stop will be at that point, and our target will be above this point. Yep, above this September high as well. So 3,600 plus. We are not sure how far it will go, but this is our idea. Will this definitely come to happen? Shall we expect this to realize? Yeah, to be honest, I'm not sure. How should I? But the good thing is the risk-reward ratio is so good that even if we have a 50-50 chance that this will occur, we will make profits and we will have a good chance to trail the stops. Trailing stops, one idea on this one, we have two possible trailing stops. One is parabolics, for example. We very often use the parabolics. I will do another video to choose the hopefully perfect or nicely chosen trailing stop. I will make another video about this. But in this case, I think the parabolic SAR in the standard setting might be a good thing on a daily chart if you want to have the full target around here. But if you're a little bit more afraid, maybe this is not going to be happen, maybe we should be a little bit more careful, then you can also trail the 4-hourly chart. But you should expect it works perfectly and quite tight if the market is moving. But in a case of a break or a small pause, it might kick you out. So you need to re-enter the market. I'm not recommending one of them. It depends strongly what you're aiming for. If you say, no, I have the idea the market is going there, then I would recommend at least until we reach that area, 3,600 here, then I would recommend to keep the market some more space. So use maybe the daily, and when reaching this one, you can switch to the tighter one, which is, for example, on an hourly chart. But if you're afraid of losing money and if you don't want to, this might be an option which is logically also okay, but is most probably not bringing you up to there, but maybe you will be stopped out here, which is also a profit, but is not giving you the whole potential of the trade. But you can easily estimate that maybe even before we enter the market here, that it is possible that you can trail the stop a little bit already to reduce your risk. So it's up to you which is fitting more your needs. So this is one trading idea. Of course, always expect that it's not a 100% chance. So we strongly recommend to only risk a decent amount of money, which is okay for you to lose, and trade several times, many times, have many trades open, maybe at the same time, just to have a little bit of portfolio effect and to reduce the risk on a single contract. It's roughly the same with the Nasdaq. This is the NQ, which is the mini CME traded mini Nasdaq 100 future, also the December contract. And in this case, the picture is roughly the same. In this case, we have the high a little bit ahead. Of course, it's roughly 12,500. It's a little bit below, but I guess when reaching that level, then we will overshoot anyway, as I have drawn in the other contracts before. The picture is roughly the same, and we were talking already about something like this: 1, 2, 3, 4, 5, A, B, C, and a continuation here. But the thing is, why I don't prefer this trade over the other one is that this pattern is not as clear as the one in the S&P 500, so I prefer the other one, but it's roughly the same idea, and you can think about what we had here is giving us a chance. This move from the low here, let me switch to the 15-minute to make sure that this is a low. This is the same low like this one. And you can see, okay, we had something strong move here to the upside, something like this, and then we had the ABC corrective pattern. Now maybe we are right on the way to the next up move, and maybe you can also find something if the market is coming down in a corrective pattern here. So you can see we have all these indications are leading to the top side. So I think that buying the market is currently the better idea. I recommend to wait for a trigger. Like I said, check, for example, the last low, the previous low, and check the intermediate high for an entry point. And then if you have a calculated stop like we do, for example, you can adapt to your needs, of course, but something like this, you should know more or less have some really nice risk-reward ratio, which makes a trading idea like this easy to trade, easy to follow, and giving a high potential of a positive trade. Okay, that's it from my side. I strongly recommend to subscribe this channel here, and also have a look at all the other videos, especially the new one talking about the probabilities. If you want to learn more about these numbers here, the probabilities, why it is like this and that, or the red areas here, to understand how the probabilities are, please have a look at the other video. I think it might be helpful to get the clue behind this. So I wish you all the best for this trading week. Please remember the times are a little bit different because of summertime switching to wintertime in Europe, at least, depending where you are. You might be infected as well. And see you next time.